Welcome to our deep dive into the world of dividend ETFs, where we are going to explore the best three options for huge dividends with great growth. Now, if you're wondering what a dividend ETF is, let's shed some light on that subject. Dividend ETFs, or exchange-traded funds, are investment funds traded on stock exchanges, much like individual stocks. They are designed to track and replicate the performance of a specific index, sector, commodity, or asset class. But what makes dividend ETFs stand out is their focus on dividend-paying stocks. These ETFs invest in companies that have a history of paying out dividends to their shareholders, and they do so consistently. Now, why are dividend ETFs a great investment option? Well, they offer the dual advantage of potential capital appreciation and regular income. Simply put, they not only give you a chance to grow your investment over time, but they also provide a steady stream of income through dividends. And the best part? You get all these benefits while enjoying the diversification and flexibility that ETFs offer. Now, there are a myriad of dividend ETFs out there, but today we're going to focus on three that have shown great potential for dividends and growth: FDVV, SCHD, and DGRW. These ETFs have been hand-picked for their impressive track records and their potential to deliver solid returns. FDVV, or Fidelity High Dividend ETF, invests in high dividend-yielding U.S. companies. SCHD, the Schwab U.S. Dividend Equity ETF, targets companies with a record of consistently paying dividends. And lastly, DGRW, the WisdomTree U.S. Quality Dividend Growth Fund, focuses on companies with both high dividends and the potential for future dividend growth. So, are you ready to explore these ETFs and see what they have to offer? Stay tuned as we delve into each of these ETFs to help you make informed investment decisions. First up in our lineup is FDVV, a high dividend value ETF. This exchange-traded fund is a beacon for investors looking to capitalize on high dividends, robust value, and potential growth. Delving into the specifics, FDVV, or the Fidelity High Dividend ETF, aims to provide investment returns that correspond to the performance of stocks of large and mid-capitalization dividend-paying companies that are expected to continue to pay and grow their dividends. The fund has been known for its consistency and reliability, with a focus on companies that are financially healthy and exhibit strong fundamentals. Now let's talk about performance. Over the past year, FDVV has shown a strong performance. It has consistently outperformed its peers in the dividend ETFs category. The fund's compelling performance is a testament to its well-managed portfolio and its focus on high-value dividend-paying stocks. But the beauty of FDVV isn't just in its performance, it's in its dividends. The fund has a high dividend yield, which is music to the ears of income-focused investors. This high yield reflects the fund's commitment to generating income for its shareholders, and let's not forget, these dividends can provide a steady stream of income, which can be particularly useful in a volatile market. Now, on to growth potential. FDVV has shown a promising growth trajectory. Its focus on value stocks has allowed the fund to tap into the potential of companies that are undervalued by the market. These companies, often overlooked by investors, can offer substantial upside potential. With FDVV, you're not just investing in today's successes, you're investing in tomorrow's winners. You might be wondering, why should I choose FDVV? Well, the answer is simple. FDVV provides a unique blend of high dividends, value-oriented investments, and growth potential. It's a fund designed for investors who want to balance their portfolio with a steady income stream and the potential for capital appreciation. Whether you're an income-focused investor looking for a steady cash flow or a growth-oriented investor seeking undervalued stocks, FDVV has something to offer. But remember, while FDVV is a strong contender in the dividend ETFs category, it's crucial to consider your individual investment goals, risk tolerance, and investment horizon before deciding if it's the right fit for your portfolio. After all, every investor is unique, and what works for one may not work for another. As you can see, FDVV has a lot to offer, but let's not stop here. There are other fantastic dividend ETFs out there that could be just what you're looking for. So stay tuned because we're just getting started. Next, we turn our attention to SCHD, a U.S. dividend equity ETF. SCHD, or the Schwab U.S. Dividend Equity ETF, is a popular option among investors who are seeking a steady stream of income in addition to potential capital appreciation. As a player in the ETF market, SCHD holds a strong position, and here's why. SCHD is an ETF that seeks to track the performance of the Dow Jones U.S. Dividend 100 Index. This index is a measure of high dividend-yielding U.S. companies with a record of consistently paying dividends, selected for fundamental strength relative to their peers, based on financial ratios. So how has SCHD performed? Over the past 5 years, SCHD has consistently outperformed the S&P 500 index. This is an impressive feat considering that the S&P 500 is often considered the benchmark for US stock performance. Now let's talk about dividends. After all, that's why we're all here, right? SCHD boasts a healthy dividend yield, typically hovering around 3%. This yield is distributed to shareholders on a quarterly basis, creating a regular income stream for investors. And it's worth noting that SCHD has a history of not only maintaining this dividend yield, but also growing it over time. But dividends aren't the only part of the picture. We also need to consider growth. When it comes to growth, SCHD doesn't disappoint. The ETF has consistently demonstrated solid capital appreciation over the years, which means that in addition to those juicy dividends, investors can also potentially benefit from an increase in the value of their initial investment. So, why is SCHD a strong contender in the dividend ETF market? It's a combination of factors. The ETF's focus on high dividend yielding US companies with strong fundamentals provides a solid foundation. Its consistent performance and growth potential make it an attractive option for those looking for both income and appreciation. Plus, with a low expense ratio, SCHD is a cost-effective way to gain exposure to a diversified portfolio of high-quality US dividend stocks. But as with any investment, it's important to remember that past performance is not indicative of future results. While SCHD has a strong track record, it's always crucial to do your own research and consider your own financial situation and risk tolerance before making any investment decisions. SCHD is a robust choice for any investor, but we've got one more ETF to explore. Finally, we're going to explore DGRW, a US dividend growth ETF. DGRW, also known as Wisdom Tree US Quality Dividend Growth Fund, is a game changer in the world of dividend ETFs. And here's why. This fund focuses on companies with promising growth characteristics, which means it's not just about the dividends it's paying today, but about the dividends it could be paying tomorrow. Let's talk numbers. DGRW has an expense ratio of 0.28%, which is quite competitive in the ETF market. It also boasts a dividend yield of around 2.3%. But remember, with DGRW, we're playing the long game. We're investing in the future. Now, you might be wondering what makes DGRW stand out. Well, it all boils down to its unique methodology. DGRW uses a proprietary system to rank companies based on factors such as return on equity, return on assets, and earnings growth. This system ensures that the companies in the fund have a proven track record of success and a promising future. One of the key things to note about DGRW is its focus on growth. Many dividend ETFs focus solely on high-yielding stocks, but DGRW takes a different approach. It aims to provide exposure to companies with strong growth prospects, which can lead to higher future dividends. In other words, DGRW is playing the long game, and it's playing to win. Let's take a moment to talk about performance. Over the past 5 years, DGRW has outperformed many of its peers in the dividend ETF space. This impressive track record is a testament to the strength of its unique approach and its focus on growth. But it's not just about numbers. DGRW also offers a level of diversification that many other dividend ETFs simply can't match. With a portfolio of over 200 companies spread across a wide range of sectors, DGRW can help to reduce risk and enhance returns. So, is DGRW the right choice for you? Well, if you're an investor looking for a dividend ETF with a focus on growth, DGRW could be a great fit. It offers a competitive dividend yield, a unique methodology, and a strong track record of performance. Plus, its focus on growth could make it a powerful tool for boosting your future dividends. In the end, DGRW is more than just a dividend ETF. It's a long-term investment strategy, a way to tap into the power of growth and take your portfolio to the next level. So if you're ready to play the long game, DGRW could be the perfect move. DGRW certainly rounds out our trio of top dividend ETFs. Now that we've explored each ETF individually, it's time for a head-to-head comparison. As we dive into this comparative analysis, we'll be looking at 3 key aspects: performance, dividend yield, and growth potential. These factors are significant when considering which ETF might be the best fit for your investment portfolio. Let's start with performance. The Fidelity High Dividend ETF, or FDVV, has shown a consistent track record of strong performance. Over the past 5 years, it has steadily outperformed the broader market, making it a reliable choice for investors looking for stable returns. However, it's important to note that past performance is not necessarily indicative of future results. And while FDVV's track record is impressive, it's not a guarantee of future success. Next, let's look at the Schwab US Dividend Equity ETF, or SCHD. This ETF has also performed well over the past 5 years, but with slightly more volatility than FDVV. This might be a better fit for investors who are comfortable with a bit more risk in exchange for potentially higher returns. Finally, the Wisdom Tree US Quality Dividend Growth Fund, or DGRW, has had a bit of a roller coaster ride in terms of performance. It started off strong, but has seen some ups and downs over the past 5 years. However, it's worth noting that despite these fluctuations, DGRW has still managed to outperform the broader market over this period. Now let's move on to dividend yield. FDVV, as its name suggests, is focused on high dividends. It boasts a high dividend yield, making it the top choice for income-focused investors. Yet, it's important to remember that a high yield can sometimes come at the expense of growth. On the other hand, SCHD has a slightly lower dividend yield than FDVV. However, it compensates for this with a more diversified portfolio, which can offer more stability and potential for growth. DGRW, meanwhile, offers a balanced approach. It has a moderate dividend yield, but also focuses on companies with strong growth potential. This makes it a good option for those looking for a mix of income and growth. Lastly, let's discuss the growth potential of these ETFs. FDVV has shown solid growth over the past few years, but its heavy focus on dividends might limit its potential for future growth. This is something to keep in mind if you're investing for the long term. SCHD, with its diversified portfolio, has a good potential for growth. It's not just focused on dividends, but also on companies with strong fundamentals which can drive growth over the long term. DGRW is particularly interesting when it comes to growth potential. Its focus on quality dividend growth companies means it's targeting firms that are not only paying dividends but are also expected to grow their dividends over time. This could lead to higher potential returns in the long run. So, to sum up, FDVV is a strong performer with a high dividend yield but might have limited growth potential. CHD offers a balance of performance and dividend yield with good growth potential, while DGRW might be a bit more volatile but has a strong focus on growth. As you can see, each ETF brings something unique to the table. It's up to you to decide which one aligns best with your investment goals. Remember, investing is not a one-size-fits-all endeavor. What works best for you will depend on your risk tolerance, investment horizon, and financial goals. In the end, the best investment is the one that helps you achieve your financial goals while letting you sleep soundly at night. Whether that's FDVV, SCHD, or DGRW, or perhaps a combination of all three, is a decision only you can make. As you can see, each ETF brings something unique to the table. We've covered a lot of ground today in our exploration of the best 3 dividend ETFs to buy for huge dividends with great growth. Let's take a moment to recap what we've learned. First, we dove into the Fidelity High Dividend ETF, also known as FDVV. This fund focuses on high dividend yielding companies, providing investors with a steady income stream. It's a solid choice for those looking for a mix of income and potential growth. Next, we explored the Schwab US Dividend Equity ETF, or SCHD for short. This ETF targets companies that have a record of paying consistent dividends, making it a reliable choice for income-focused investors. It also includes a diversification across sectors, providing a level of protection against market volatility. Lastly, we delved into the Wisdom Tree US Quality Dividend Growth ETF, otherwise known as DGRW. This fund targets companies with strong growth potential and a commitment to increasing their dividends over time. It's an excellent option for those looking to balance income with the potential for capital appreciation. Remember, each of these ETFs offers a unique blend of characteristics, and there's no one-size-fits-all solution. It all comes down to your individual investment goals, risk tolerance, and time horizon. Investing in dividend ETFs can be a great way to generate passive income and potentially grow your investment over time. But as always, it's essential to do your due diligence before making any investment decisions. Keep in mind that past performance is not indicative of future results, and investing always comes with risks, and that brings us to the end of our journey today. Remember, investing is a journey, not a destination, so continue educating yourself and making informed decisions. If you found this video helpful, do subscribe, like, and share it with others who might benefit. Until next time, happy investing.